The public sector space is being recommended as one of the best themes to invest in. The PSU banks are clearly among the hot stocks these days. The Nifty PSU Bank Index is up 68% in the last 1 year. That's an alpha of 45% over the Nifty 50. The question is, can this outperformance continue in the future? If you want to understand whether this is a big opportunity for retail investors or a potential trap, please keep watching this video till the end and make sure you subscribe for more investing videos. Namaste and welcome to Retail Investing. As a retail investor, I think it is very important to understand the vision and mission of any company before investing in it, because that would help us set the right expectations. Wrong expectations mostly lead to disappointments. If you want to understand the real philosophy behind the creation of the PSUs, you need to have a look into the Constitution. Article 39C says that it is the duty of the state to prevent the concentration of means of production. So based on these ideals from the Constitution, the PSUs were created. The purpose behind the creation of the PSUs are threefold: controlling the monopoly of private sector companies, make certain products and services affordable to the citizens, and implementation of various government schemes. None of these goals suggests maximizing profits, as is the case with private companies. So if the government suddenly decides to take away all the profits of a PSU company and distribute it as subsidies to the poor, it would not be an arbitrary move, but totally in accordance with the law and the Constitution of India. I think retail investors should understand this very well before even looking into the PSU space. As a citizen and a consumer, I may want the government to stop private companies from creating monopolies, because in a monopoly, the seller gains at the expense of the consumers. But as an investor, I would specifically want to invest in monopoly businesses which have pricing power. In case of PSU companies, the chairman is the head of the board of directors and he is also the CEO and the managing director. If you have watched the video on management, you might remember that if the chairperson is the same as the CEO and the managing director, it is supposed to be a red flag. Not really in case of PSU companies. So the promoter of PSU companies is the President of India or the Union government, and they have to face elections every 5 years. In a private company, one family can remain the promoter for a century. So in case of PSU companies, the promoter management dynamics is quite different from private companies. And the PSUs actually don't have a real management. It's more like a bureaucracy. It is important to understand that an ideal management promotes entrepreneurial spirit, while an ideal bureaucracy suppresses it, especially the kind of bureaucracy that we inherited from the British. However, PSUs have some advantages as well. For example, in many defense PSUs, military veterans are appointed as the chairperson. Private companies don't have that privilege. So let's start with discussing the PSU banks, because they are being recommended the most among the PSU stocks. If we compare the net profit figures of the public sector banks with the private sector banks, we will see that the net profits for the public sector banks doubled from financial year 21 to financial year 22. In case of the private sector banks, it grew by 39%. When it comes to asset quality, the public sector banks have increased it due to reduction in NPAs. In fact, there is a metric called slippage ratio which measures new NPAs generated. In this metric, the public sector banks have outperformed the private banks in financial year 22. As of March 2022, out of the total outstanding deposits, 62% was accounted for by the public sector banks, and also 58% of the total loans and advances. Except SBI and IDBI, all public sector banks are trading at attractive valuations that is below their forward book value. In case of banks, book value is an important metric for valuation. So is it a no-brainer to invest? Well, according to a report by the Reserve Bank on trend and progress in banking 2022, the PSU banks saw improvement in their NPAs mainly due to loans being written off, while in case of private banks, it was due to upgradation of loans. Let me explain the concept of loan write-off in short. Suppose you take a personal loan of 5 lakh rupees with a tenure of 3 years. You pay the EMIs on time for the first 12 months and then stop. The bank tries all legal means to recover the loan, but they fail. So what they do is reduce the total amount of the loan from 5 lakh rupees to 3 lakh rupees with the expectation that if the EMIs get smaller, you might start paying up. As per the report by the Reserve Bank, this is exactly how the NPAs of the public sector banks have drastically improved. And the biggest risk factor for investing into PSU banks is still unearthing of an unexpected scam which may have started years ago. The share of retail loans as part of the total loan book has gone up for the public banks, but still it is not up to the level of the private banks. So how exactly are these banks expected to perform in the near future? So in the next few years, interest rates are expected to be much lower than what they are today, and inflation is also going to subside. In such a scenario, public banks are expected to perform well. So these stocks can be expected to generate good returns for the next few years and probably outperform the Nifty 50. But for me, they definitely do not belong in the buy and forget category. In the PSU space, my favorite category is the defense companies. These defense companies are almost like monopoly businesses, and there are very strong entry barriers in the industry. It's not that easy for any private company to get a license for manufacturing things like missiles and warships. These companies don't have to look for a lot of customers. These companies have only a few customers who place huge orders. Customers like the Navy and the Air Force. And that guarantees revenues for several years. So the expenses on marketing and advertisement are almost non-existent. Heavy expenses on marketing, advertisements and distribution have made many companies bankrupt. Some of these defense companies have seen drop in revenues in the last few quarters, and that's because of delays in the execution of projects. And these delays happened because of supply chain issues. Various electronic components were not available in the last few quarters. Russia is a major supplier of metals and minerals commonly required for manufacture of electronic components, and Russia has been heavily sanctioned. The war has disrupted the supply chain. For example, neon is an irreplaceable and a major component for semiconductor chip manufacturing. 90% of America's neon supply came from 2 Ukrainian producers, and they shut down soon after the war began in 2022. There is also a shortage of materials like copper, without which electronic cables cannot be made. These supply chain issues are expected to ease in the next few quarters. Plus, the order book is quite strong for these defense companies. Let's have a look at some of these companies. So the first company on my watch list is GRAC Limited. The chairman and the managing director is a retired Commodore of the Indian Navy. As of now, the company is relatively small and belongs to the Mini Ratna category. Its vision is to become a Navaratna company by 2030. So the company's area of expertise is shipbuilding, and its primary customers are the Indian Navy and the Indian Coast Guard. Now the company is capable of manufacturing a wide variety of military ships, and their engineering division builds portable bridges, which are very important from a logistics point of view for the army. The second company on my list is Mazagon Dock. The chairman and managing director is a retired vice admiral of the Navy. It specializes in submarine building. Now, one of the objectives of the company is to generate 20% post-tax return on equity as per the guidelines of the Department of Public Enterprises. The third company on my list is Cochin Shipyard. It specializes in manufacturing merchant navy ships, ship repairing, and by repairing I mean the repair of aircraft carriers. It has a 2030 vision of becoming one of the leading global shipyards. They already have clients located globally. If you look at America, their defense equipment is manufactured by various private companies, and these private companies have so much lobbying power that they have influenced the American government to start wars. This was done just to boost the sales of these companies. In the past, America got involved in a lot of wars which were funded by debt, and that is not good for the economy. We all know about the debt crisis going on in America. That which is not good for the economy is definitely not good for long-term investing. When government-owned companies manufacture the defense equipment, the situation of such lobbying won't arise. The Ministry of Defense has plans to make the Indian Navy a blue water navy, which means they are going to need a lot of ships. So I can see a lot of future revenues for these defense companies. But please note that these stocks have gone up 3 to 6x in the last 1 year, and it looks like corrections have already started. As soon as they look cheap to me, I am investing in them. Don't forget to type in the comment section which are your favorite PSU stocks. Thank you for watching the video, and I'll see you soon. Jai Hind.